If you buy off plan, you're going to get better capital growth and therefore eventually you'll get better rental yield. It's a fact. It's always been the case.
So let's look at how an investor would consider their investment in property in Dubai between an off-plan development and one in the ready market. So let's start with just the definitions of the two. What is an off-plan property and what is a property on the ready market?
So an off-plan property is a property which is either under construction or is about to be constructed, being sold directly by a developer to you as the investor or the end user. Whereas a ready property is a property obviously that's been built some time ago. It might have been finished a week ago, or it might be finished 10 years ago or 20 years ago. So that's what a ready property looks like.
At what stage in the process can one buy an off-plan property?
You could buy an off-plan property on the day of launch. You could even buy, in some cases, an off-plan property before the launch. You can put what's called an expression of interest. You don't have many details about the property, but at least you're first in line when those details are available to be able to choose your apartment and to commit to either buying that or walking away from it because it isn't what you thought it might be.
What are the differences between buying an off-plan property and a secondary market? And think of it from the point of view of considerations for the investor.
So what are the differences between off-plan and ready properties and the process of actually buying one? A ready property obviously is there. You can go and see it. You need to travel to Dubai to see it. Whereas an off-plan property, you don't need to come here. You can do everything remotely. After all, we're buying something that doesn't exist. So even if you did come here, you wouldn't see what was happening. Of course, some developers might have a show apartment. You might want to meet the developer directly, or you might want to go to the site where that building is. All of those things you could do. Now, with a ready property, it's available. It's more than likely going to be rented out already, or maybe it's owner-occupied. And you would be able to arrange to do viewings in a more traditional way of buying a property. So you arrange a viewing, you go and do the viewing, and then you make an offer. When you're buying an off-plan property, the price is the price. It tends not to be very negotiable or not negotiable at all. The ready property will, by definition, be an older property, and it may have been built some time ago, and therefore would not necessarily meet the latest requirements in terms of efficiency, building regulations, and size, investment quality. The facilities within the building will be older and won't necessarily meet the current demands for what a building should include in terms of amenities. It definitely won't have a paddle court because that's a new thing. And it might have a tennis court, and it will definitely have a swimming pool, but it may not have the quality and the equipment level that you're going to find in new and modern buildings.
How do initial costs differ when buying an off-plan property compared to that of a ready property?
So obviously when you're buying a ready property, you have to pay for it in full there and then. There's no payment plan involved. There's no payment structure over the build period. You have to pay for it there and then. Yes, you might be able to get a mortgage to assist with that purchase, but you're paying for that, the apartment or the house that's ready in full. You pay the agency fees. You'll pay the Dubai Land Department fee. You'll also pay transfer fees. Transfers that are being managed by the Dubai Land Department at either the actual Dubai Land Department building or at a trustee's office where you do the transfer. Whereas with an off-plan property, you're going to pay the 4% DLD. Yes, you'll pay a 4% and the admin fee, but then you'll be paying for the property in installments. And generally, when you're buying an off-plan property, it's important to understand how those installments work. Payment plans are what developers can change and adjust to create interest in that property. That's one of the factors that we're looking at. These days, you tend to have more aggressive payment plans which would be something like 60 or 70% during construction, even cases where I've seen 90% during construction, 10, 20, 30, 40% on completion, or maybe even post-handover for a year or two. So you don't get that with a completed property. You're going to have that facility to pay for the property over a period of time without any interest.
A ready property has an established community. It's had its wear and tear in the building. We know kind of what's good and what's bad. There's almost no surprises. Isn't that just a safer bet? Because I know what's in the community. I know there's people there. It's thriving. Infrastructure is ready. Isn't that just a safer bet than maybe a risk of an off plan?
So yes, buying. There's little to no risk in buying a ready property for sure. Now, my question always is to people that are thinking about investing in a property in Dubai is, do you really need an income today? Because that's all you're going to get as an advantage to buying a ready property. And most of my clients are younger, and therefore they don't need that yield. Yes, they're going to need yield when they're older and they're not working anymore. But at the moment, they need capital growth and they need a good rental yield eventually. And you will get a better rental yield when you're buying off plan for sure. Not just because of the costs involved, but also because you tend to get a higher rent for a newer property, and the price of that property is going to be lower in almost all cases than a ready property. So your yield is going to be higher. So you're going to get better rental yield combined with better capital appreciation. So in a longer term investment strategy, which most people who are buying investment properties have here in Dubai, you're going to see a better return. When you're buying a ready property, you have far less choice than you would on an off-plan property. An off-plan property, there's an entire building that you can buy. Whether you want to buy 5, 10, 20 properties within that building, you have that choice. You can buy one, of course. Now, if you're looking at a ready property, you're only going to be able to buy those properties that are for sale by the owners or by the investor. So your choice is lessened. When you're looking at a ready property which already has a tenant in it, it seems on paper as a really good investment because you've already got the tenant, the deal is done, fantastic. But is that tenant paying the market rate? And are you aware of the rules and regulations around increasing that rent, removing that tenant from the property, and etc.? And those are things that you really need to look at and investigate. At this time of now we're talking at the moment, you have to give at least 12 months notice to get someone out, but then to get them out of the property, but then you have to give a very good reason. And it can't be just that you want to get a new tenant who's going to pay you higher rent. You can't do that. It has to be that you want to sell the property, resell the property, or that you want to live in it yourself. Or you want to make major repairs to the property. The main thing for me is a lot of my investors live overseas. So if they're looking for a ready property, they need to make arrangements to come over to Dubai. They need to come and go on viewings. They are the behest of tenants generally who it's not really in their interest to help the landlord sell his property. For obvious reasons, maybe they're going to get them out, or they're going to try and increase the rent, or they're going to do whatever it is with their property. So you've got to rely on tenants being there. You've got to rely on traffic in Dubai that you're going to turn up at that appointment at the right time. The owner of properties that are ready are not necessarily professional sellers. When you're buying off plan, you're dealing with a professional selling process, whereas when you're selling something ready, there's a lot more emotion involved from the salesperson, from the selling, the owner, the landlord. So you have to book your ticket. You come over to Dubai, you stay for a week. You thought you were going to see 16 properties. You end up seeing 5. None of them are suitable. You go back home and you're just disappointed, and you're going to blame your agent because you think your agent hasn't organised things properly. But actually, there's lots of other circumstances involved when you're looking at properties that are completed as an overseas buyer. Now, if you're here then it's probably a lot easier. But even then, do you get the time off work? Have you got the time to go and have a look at properties, spend all weekend looking at properties, etc.? Off-plan presents you with much easier. You can do it from a desktop. You don't have to leave your living room or your office. You don't even have to leave your country. You can buy a property. Everything can be done online, remotely, via video, via email, WhatsApp, and couriers.
Is there a particular type of strategy that is more suited towards off-plan versus ready property in terms of investment strategy?
Yeah, if you have a long-term view when you're purchasing the property, I can pretty much guarantee if you buy off plan, you're going to get better capital growth, and therefore eventually you'll get better rental yield. It's a fact. It's always been the case. If you buy a ready property, yes, you may, because of certain market conditions, you might experience some capital growth. It could even be greater than the off-plan property you could have bought. But in most cases, I would say that off-plan property is a better investment for capital growth, which then turns into better rental yield when the property is finished. I've got a client, he's just rented his property in JVC. He paid 800,000 dirhams for the property. The property is now worth 1.2, 1.3 million 3 years later. So he's made a significant return on investment. He only paid 50% during construction and 50% on completion. So he could have sold it effectively before he paid the second 50% on handover, and he would have made a significant capital appreciation on his equity, on the amount of money he's put into it. So he's now renting that property for 100,000 dirhams. 100,000 dirhams when he paid 800,000 is a fantastic return. Is 100,000 such a good return if he pays 1.3 million plus all the fees in buying on a secondary market? Probably not. But I do understand why some people might want to buy a ready property. We have a whole load of people in my company who are just concentrating on ready properties. And obviously there's a lot of people out there who prefer to do that. I get that. But there's horses for courses. There are some people who want to buy off plan, and I can present a very good case for buying off plan. And I could probably give you a very good case for buying on the secondary market. But in my experience, if you are a certain type of investor looking for capital growth and high rental yield, and you're not in a rush, and most people who are investing in Dubai should not be in a rush, and you will get better returns if you buy off plan. That isn't the case with all developers. There's one or two developers out there who, in my opinion, are charging far too much for an off-plan property in comparison to something which is completed. But those are the developers you avoid if your strategy is to buy off-plan. That's where your agent will help you in that process and advise you accordingly. If you need any help with off-plan property in Dubai, please get in touch. All my contact details are in the description below.